Welcome back to another episode of In Focus with Haversine Funding. Today, as my co-host, I have Vince Mancuso. Vince, thank you for joining me.
Thanks for having me, Nolan.
And our very special guest, Robyn Barrett. She's been in the factoring and ABL industry for a number of years. She's been a leader on the front lines. She has successfully started and sold a factoring group to a bank. She's been at the forefront advocating for change in our industry. Robyn, thank you so much for joining us on our podcast today.
Thank you. This is awesome. Very excited.
Yeah, can you tell our viewers and listeners a little bit about your journey in the industry, where you started and how you got to today?
Yeah, well, I'm not going to take like hours of your time, so that's good. But yeah, so I started, I'm a CPA, and I actually did not think about when I was younger that I would be a factor or a lender, but it just kind of went down this path. I worked for a company called Finova Capital years and years ago. And when they went bankrupt, I decided to just kind of maybe see if I could do it myself. So that's what I did. I went out and I started a factoring company in June of 2001 and started out very local in my state and my city. And then actually over the 21 years, built it into a national lender, doing primarily factoring some ledgered lines. And then in April of 2022, I sold my company to Oxford Bank, which is now, we are a subsidiary of Oxford Bank, which we're known as Oxford Commercial Finance. And it's been a really fun story.
Yeah, and that's an awesome journey, and it really kind of shines on your entrepreneur spirit. You had mentioned something that I found funny. You said you didn't plan on starting in factoring and lending, which I feel like that is the repeat story you hear in this industry. You just fall into it, and it just kind of has a way of sucking you in and keeping you there. That's awesome. So today, you are very involved with Oxford Commercial Finance. You are also involved in the AFA, which is the American Factors Association. Can you tell me a little bit about what that organization is and what you guys advocate for?
Yeah, absolutely. So I became the president of the AFA, I think about almost a year and a half ago. We've been lucky. We've had a lot of really great leaders, so it was easy for me to step into that role. So the AFA, I think most people are very familiar with the IFA, which is the International Factoring Association.
Right.
And the AFA, which is the American Factoring Association, is a nonprofit that was set up to advocate only and always on behalf of factors. We are funded solely by donations from factors, and all the members volunteer their time. So when you hear about, AFA board members going to DC to advocate for factors, that's all on our own dime. So all the donations that are received go directly then to the lobbyists and lobbying efforts. So our main focus right now, actually, for a while, has been to work with state and federal lobbyists to identify and find some resolutions to issues which affect factors. And I think what we're going to kind of delve into, which is number one, is what's going on at the state level and the federal level that's really affecting, the factoring and lending community.
Absolutely.
And you've sat on both sides. You've been an entrepreneur in our space. You've worked for a bank-owned shop in our space, having sold your business to the bank. Why should everyone be involved? Does this not discriminate small from large? Is it important to both sides?
Yeah, and that's an interesting point because, unfortunately, the donations and the people that are involved, let's say for members of the IFA, is a very small percentage that are actually actively involved with the AFA, and we need everybody. And I understand if you're a small factor, you don't have a lot of money, but donations can start at $500, and it's not so much even the donation amount as we need boots on the ground. So having big banks as members helps because they can write bigger checks, but it's not just that, right? Just writing a check is not all of it. We need people. We need grassroots efforts. So for example, when Texas actually just was had introduced a bill, and we were able to get Paul Harmonson and to go down to the state capitol and actually plead our story. And that made a big difference, right? And it really helped the AFA be successful in keeping disclosure laws that are more appropriate for factors.
With respect to those disclosure laws, what motivates states like California, New York, and some of these others to start adopting or considering adopting those sort of requirements?
Yeah, so I would like to say it all started with California. And no offense, but I'm not a big fan of California right now. So they have been probably for factors and the lending community the most disruptive. And so they started with a California lender's license. And I can't remember how long that they've required that, but it's been at least 20 some years, I believe. But they started then, and really all disclosure started from one main issue. Because I can tell you, Vince, you've been in the business for, a long time like me. And for years, we didn't have to worry about disclosure. That just wasn't something that we even had to discuss. Factors are self-regulated via the IFA. And so it was no issue. But merchant cash advance loans came up probably about, I would say 10 years ago, 10, maybe 10, 12 years ago. And the merchant cash advance lenders and the way that they lend money caused a lot of small businesses to fail or have issues. So that created then, let's say in California, where, you've got a legislator and their constituents are complaining about, there's lenders out there that are not banks, that are not being regulated, and, they're doing all kinds of crazy things, and they're putting small businesses out of business. And obviously we know that small business is the backbone of America. And when that came up, that became a very hot political issue. So California was the first one to really grab the reins and create a disclosure form. Unfortunately, the disclosure form that they introduced had an APR to it. That's how you had to calculate it. And factors don't charge an annual rate. They don't charge an interest rate. Many charge a fee. So it was very, very difficult for factors to be able to comply with that APR requirement. But unfortunately, we have to live with it if you want to do business in the state of California. So after California, I think, you've got New York, same thing. I'm sure there were small businesses that were hurt, and then they complained and it became a political hot button. So New York also has disclosure laws. It is interesting because I think Nolan mentioned, what is the difference maybe between a big bank or a bank and a small factor? Unfortunately, small factors or independent lenders are subject to all disclosure. Bank-owned factors are not. We are exempt from all states. California has some funny rules. Oxford Bank is a state charter bank, so we still have to comply. So not everybody gets out with, get out of jail free card.
Yeah, and it already seems like such a confusing thing to navigate. As you'd mentioned, there's states that are adapting to it and adopting things similar to California. So is there a difference between what California is requiring versus what New York and these other states are?
Yeah, so there's two primary ways that you would have to disclose, right? And again, the goal, really, let's remember, let's step back. The goal of this and how this disclosure came up was because you have some bad actors. You have some merchant cash advance lenders that are charging really high rates, and it wasn't transparent. Factors, asset-based lenders, is pretty easy to understand what the fees are and how much, the business is going to pay. So these states, and unfortunately at the state, you've got people that are making laws or introducing bills that don't understand our business, right? And so that's a problem. And so, and they may have never even heard, no finance. And so that's an issue. But a state like California will require disclosure as an APR. You have other states, and I believe that New York is also APR, but you have other states, Florida, for example, that has a disclosure law, and it's total funds. So, it's showing that, here's, the dollar amount that, that your borrower is putting up as collateral. Here's how much the lender is advancing. This is the lender's fees. And then in that, here's what goes to the borrower. So the whole idea, though, guys, is that the states are trying to find something that is apples to apples. So if I'm an ABL lender, and I'm competing against a factor, and if it's total funds or APR, the states are hoping that they'll create some disclosure rules that will be apples to apples, but that's not happening. So that's why the AFA is involved.
Okay. Yeah. And I can obviously tell how important that is. With a lot of these factoring companies, what are some of the immediate challenges that they're facing? This is all new to them. You have factoring companies that are just, a couple man shop to large organizations, and they're all having to abide by the same rules. So what are some of the immediate challenges that you hear about from different size factoring companies and all these new regulations?
Mhm. So I think every lender, I think our frustration is that you've got various states, right? And every state puts their spin on the disclosure. For small, medium, large companies, you now have to allocate manpower into making sure that you comply correctly. So the larger the shop you are, probably the better you're able to absorb that cost. For small factors, it's a nightmare, right? Because like when I was an entrepreneurial factor, I was running the company. So with all these different disclosures in different states, who in your shop can do that? And now you've got to take them away from doing, what they were doing, managing risk or whatever. So I think the biggest complaint from all lenders has been, the time it takes to comply, and the manpower and the cost. That can be pretty steep.
Yeah. Are there groups that can be outsourced to for the boutique factor?
Right now, Vince, I know that there are attorneys that are offering that service, but again, that's a cost, and so I will tell you though, that I think for anybody listening, just to, kind of become aware, the AFA and the Secured Finance Network both have really good information on their websites. It's free. It's there. I don't know if SFNets is free, but I know the AFA, you can go and the AFA will list all the states that have disclosure law, and they'll give information. The AFA and SFNet won't give legal advice, but they do have a lot of kind of that base information. And then I think, Vince, for kind of outsourcing it, I think there might be some attorneys that are doing that, but again, it's coming at a little bit of a cost.
Right. Yeah.
What's the AFA website? Do we know that?
It is AmericanFactoring.org.
AmericanFactoring.org.
I had it pulled up just off camera. Yeah. I was actually looking at some of the resources right before we started the podcast. So as you had mentioned, some of these smaller factors that they might not have the manpower. It is expensive. It's time consuming. So if I'm a factor, regardless of size, and I say, I'm looking at two options. We'll either comply and do what's required, or I can just not lend in these states. Now, if I decided to continue to lend in these states, what does that penalty look like? And how is that monitored?
I get that a lot. Like people are like, well, I've done business in California and nothing's happened yet. So I'm just going to kind of fly under the radar. That's not going to happen.
Yeah.
The biggest issue and the way you'll be found out, right, a lender, is if you're doing business in California and you have a client in California, and that client, let's say you're in a dispute or you're terminating them, or there's even a legal matter or any issues, your client can go online in California to see if you have a lender's license. If you don't, the party's over. And it's, because then there's not only a penalty with the state, and I'm not sure exactly the exact dollar amount, but I've seen it I've seen it out there at like 25,000, but that's not the worst of it. That's the state, let's say that's the state penalty. The state can also say that, their usury in California, I believe, is 10%. And so the state can say, since you weren't licensed to do business in California, you got to claw back all of your interest and fees and pay it back to the client. Worst case scenario, now they're going to audit you. And what other companies have you lent to in California? And now they're going to look at the interest and fees, more penalties, making you claw back your interest and fees. So my best advice for anybody listening is do not take the option of, I'm just going to fly under the radar and I'll wait till they catch me. Because I will tell you, we have clients in California, and we've had some disputes, and I'll have attorneys call me, and the first question they'll ask is your company licensed in the state of California? And I'm like, yes. and it's also on our website. But attorneys are getting smart, and they're looking at that as a way out with lenders and a way to claw back fees and interest.
Right. So, um, if I was a factoring company that wanted to stay compliant, is it as simple as, using my resources and leveraging my attorneys to help guide me along that process? Is there anything more that I should be doing?
So definitely, if you're going to be in a state that there is disclosure law, I mean, again, best advice is comply, right? Complying with disclosure is easy, right? Like Florida, you don't have to register in Florida. You don't have to have a lender's license. So it's pretty easy. And honestly, the information at SFNet and AFA can be very helpful. And there's tons of attorneys, like I said, out there that are in our industry that can give you sample forms and help you with that. The issue is in California. So California, and so Utah actually is introducing, or it started, where you have to register in the state of Utah. So far, there's no licensing requirements, but registration is the first step, right? They get the data, and then they're like, oh, we should do more with this data. We should be regulating more. But for California, to get your lender's license, and just as a comparison, I got it when I was independent, and that was probably 10, 12 years ago. And it was a really easy process. Like, it was not difficult. There were a few hurdles, no big deal. I did use legal counsel to help me navigate through, because I found that the state of California is a little difficult to work with. Fast forward now with Oxford Bank, and we're getting our Oxford Commercial Finance, and we're getting our lender's license in place. It is an excruciating process. It is. I cannot tell you how excruciating.
Sure.
I would rather give birth 8 times without any medication than to do this. So it is a long and tedious process. We are, again, using California counsel because they understand exactly what the state is looking at, and they will make your road a lot shorter.
That's awesome.
We mentioned California, New York, Utah, Florida. Are there other states that we should be aware that there's an imminent concern they could go live?
So there are 9 states right now with disclosure laws. So there's California, New York, Utah, Virginia, Georgia, Florida, Connecticut, Missouri, and Illinois. Wow. There are other states. So, bills come up all the time, but a lot of times, I work more closely with the AFA. Our lobbyists will become aware, and they'll let us know. And so we can either do grassroots efforts, or we start, emailing, the people that are, behind the bill. And that can be that we've been pretty successful at the AFA with that. But the problem is that, Vince, is that I think that ultimately every state is going to try to adopt some kind of disclosure, because it's just a really popular item, right? And it really is, you're saving small businesses. And I think that is in our political world, that is an easy bandwagon for legislators to get on. So I know that, for example, Kansas, and there's a handful of other ones that we're working on that have introduced bills. And then, and again, we try to get involved, and I know SFNet does also, right at the very beginning when the bill's introduced, so we can give our opinion, and we can try to maybe help shape, if there's going to be law, help shape the law, so it's something that our members can comply with. But it's going to be, and that's going to be what's difficult, Vince, is that every state is going to try, again, every state's going to think they can do it better, and they're all going to put their own twist on it. And then all these independent lenders are going to be sitting here going, now I've got, 50 states that have got 50 different types of disclosure. So I know the AFA is working on a federal bill now that we would actually introduce through the SBA. And so it's still in the initial stages. We have AFA members going to DC in September to kind of start the discussions on this, federal disclosure. And the whole idea is to have federal disclosure, which preempts state law, kind of like we did with the UCC code.
So it seems like every time I talk about these disclosures in the states, a new state is added. Just now, when you went through that state list, there
Yeah.
was, a couple on there where it was news to me. So, what's some best practices that as a lender to make sure that you're staying on top of that? Because I know you get so busy with the day to day, and
Mhm.
you have to remind yourself to kind of take a step back and make sure that you're staying compliant, because here comes Illinois and Missouri. So what's some best practices that you would, share with our audience?
Yeah. So one, you can go the more expensive route, maybe, and hire counsel and rely on them to let you know.
Hmm.
I think best practice is to be aware. So, like I just mentioned, SFNet, Secure Finance Network, become a member there. They have an advocacy group that is very good. And then you've also got if you're a smaller lender, and donate to the AFA, get involved, listen to the webinars that we put on, check the website. And we also send emails out. We send emails out about every 2 months, letting our members know, hey, here are the things that we're working on. Here are the states that are looking at introducing disclosure laws. Also, like I said, when our lobbyists let us know that a state is going to introduce or a bill's been introduced, we actually will work with the IFA and go through and try to find members of the IFA that are in those states. And then we'll contact them and ask them again for their help. And it's not just dollars that helps, but it's also people, right? People that are grassroots right there. It's their state. They might know, a congressman, or they might know a state legislator that's getting involved. On the federal level, it helps to know, your federal Congress and senators, to help us push that bill. But at the state level, right now, it's so helpful for us to have those local people. But for people that are just trying to figure out what's going on, go to the AFA website, go to the SFNet, and make sure that you're opting in for the emails and the webinars.
It's a great resource there. Kind of flipping the switch from a borrower's perspective. How are you seeing them getting impacted? Borrowers that are in these states, are they having much of an impact, or is everything kind of staying as course?
That's an interesting question. So, for example, let's just say California again. When California, because of not only the lender's license, but the disclosure and the difficulty of the disclosure, there were a lot of lenders that actually left California. And really that's sad, because what the state of California has done is, instead of improve the lending options for their small businesses, they've actually reduced those. We have been doing the disclosure. We do disclosure for anything under 500. Anything over 500, we're still doing what we call a reasonable expectation letter, which was provided to us by our attorney as more of a CYA. But I prepare these, and my BDOs will prepare these disclosure forms, and we never get a question. Like, no one's questioning it. I mean, so it's interesting. I don't know if these borrowers are comparing it, or they're not. It's interesting, I guess, if they got an MCA disclosure form. I mean, I'm sure that would be, that makes all
100%.
factors
Yeah, might
look
raise
really
some
cheap.
alarms.
Well, the transparency is a good thing, but you hit the nail on the head. In their effort to regulate, it becomes disadvantageous for the borrower because there's less
Yeah.
options.
Right. Yeah, which is kind of what I was poking at in the question, just because, you hear a lot. It's just easier to stay away from those states than trying to keep up, or at least wait until the dust settles. And then with the efforts of the AFA, maybe there's one, just one flat, one flat,
Federal.
Regulation.
yes,
Yeah,
Federal.
yes, federal. It's not, it
That
doesn't
sounds
change.
appealing to me.
Right, exactly.
Yeah,
So
I would
what
agree.
are some
Yes.
what are some other questions that you are getting from lenders, on how, are there any other questions that we kind of didn't ask that you're getting on how to navigate all of this?
No, I think you covered a lot of it. I mean, unfortunately, we're all navigating these uncertain waters, right? And like Vince said, it could be a Friday afternoon at 4, and all of a sudden you find out that your state is introducing, a disclosure bill that could be completely ludicrous, because the people that are writing the bills don't understand at all what we do. And so, I think it's just, the questions I'm getting is people are just, always like, what state's going to be next? How can we comply? How am I going to be able to afford this? What about if I do it wrong? And I will tell you that the California and SFNet did this for us, that they got a safe harbor provision passed. And so, you have to make your best effort. So, you can't just kind of like, reduce your fees and all that to make it look like you look better. But as long as you take that, and you follow the rules that the state of California has, and you use your best effort, if you do not exactly calculate the APR correctly, and that's kind of a vague area too, there isn't liability. But lenders are really concerned about liability. What about if I do it and I thought I was doing it right and I didn't, and I get sued, right? So I think for lenders, there's a lot of, it's just the uncertainty. And I do think that if we could get, a federal law, either through, the SBA or, uniform, uniform law like the UCC, that would be great. And it would preempt state law. And so lenders would just have one form that they would have to comply with. And I think it would be much easier. The problem is that's a real uphill battle, right? So, I mean, we're talking, it could be 5 years. And in the meantime, states are going to continue to, introduce bills, have disclosure laws, because it's a really popular item.
And are we fighting this fight independent of what maybe the MCA industry is doing? Are they taking a parallel approach? Are they lobbying for federal regulation as opposed to state? Maybe another way to ask that is, are our efforts benefiting others, or are our efforts primarily for our use?
Great question. Yeah.
Yeah. So our benefits, so the AFA really, I mean, and so, it's funny because sometimes the AFA and the SFNet don't see eye to eye, but, for the most part, we all agree that we don't want disclosure. But the MCAs, they're really tricky, right? Because they have a lot of money, and they, and they've been able to raise a lot of money, and their lobbying efforts are much different than us, right? And so, but they're out there trying to get, where they're trying to fight that fight now where they're lending on future receivables, so it's not a loan, right? So our lobbying efforts are completely different. And their whole fight right now is that they shouldn't have to disclose because, they're funding on future receivables. So, how do you calculate an APR on that? I mean, so I know it doesn't make sense, but that's what their argument is.
Yeah. And a couple of questions that came to mind that I'm sure you get often also is there a minimum dollar amount? So if I'm a lender, is there minimum? And then also, kind of to give you two questions at once, can you be grandfathered into an already existing deal that you're in one of these states?
So let's start with the latter. So if you're buying a factor that has, let's say, a California's lender's license, if you bought the equity of the company, right? So, then yes, you would basically get that California lender's license. You'd still have to put in that, that there's new ownership and have to go through all the fingerprinting and all that. But if you buy the assets of the business, then the license doesn't transfer. So that's an issue. In terms of, it doesn't always work well. So in terms of dollar amount, again, no one likes the answer, but the levels required for disclosure vary state by state. So, so California, I think, is anything under 500,000, and New York, I think it's anything under, I think it's 2.5 million.
Okay. Yeah. So just more and more to navigate. They really made it easy on us. Yeah.
Yes.
So if we heard you correctly, first and foremost, get involved, talk to your leadership, your state leadership, federal leadership to the extent you can, donate resources, donate time, go to AmericanFactoringAssociation.org, learn more about this cause. It's a cause that affects all of us in our industry in some form or fashion. It could be coming soon to your state. Any other tips or advice that you could leave our audience with?
No, I think just being aware, and again, there's tons of resources through SFNet and AFA that you can't just sit there and go, well, I had no idea. I mean, there are resources, and don't try to just put your head in the sand and say, well, it'll never happen to me, because it will.
It's coming. Yeah, well,
It's
this
coming.
is yeah, this has definitely been a hot topic, not just with legislation, within our community as well. It's something that's so important for our industry to get educated on, and I can't thank you enough for joining us, Robyn. This is such an important topic. It's
I
an
agree.
ongoing topic. It's not going to stop anytime soon, as you said. And thank you so much for, the time and the effort that you put in to be at the front lines for our industry, yourself and the other members at the AFA, to advocate for change and advocate for a uniform bill where
That's huge.
yes, it's so huge and it's so impactful. So thank you so much for joining us.
Thank you, Robyn.
Thank you. Thank you for having me.
And Vince, thank you so much
Yeah, I
for
enjoyed it.
joining me
This
on
is a
this
topic
ride.
that's
Yeah.
been very, very hotly discussed.
Yes. And all of our viewers and listeners, thank you for joining us as well. I know this is very important to you guys. It impacts your day to day. We can't thank you enough for giving us this platform where we can talk about things like this that are so important to all of us. And most importantly, thank you for our viewers and listeners for joining us. And remember to stay inspired, stay informed, and stay on course to growing your financial platform. Until next time, in focus with Haversine Funding, we're signing off.